There is a lot of uncertainty. We live in a very uncertain world. And right now in crypto, there is a lot of talk of continued downside. With that being said, how do we identify the opportunity on the Cardano charts? In this video, I want to break down what I think is the winning approach to ADA accumulation. What is up, everyone? Welcome to Crypto Capital Venture. It's a Cardano video. Hit that like button on the way in. Let's jump into the Cardano video. This is a monthly chart. Before we start talking about Cardano opportunity, ADA accumulation, right? I want to just take a very quick clip, a glance at this clip. This is from January 22nd, 2022. This is extremely important for context to what we're about to talk about. We do have this 80-cent target to the downside that we've talked about. And now that we're below the lower trend line, once again, we need to discuss that more. But we also have a target to the downside of in the 50-cent range. And this was January 22nd. This was the beginning of the year. We're about to head into May. So the first things first, this is a perfect example of how long it takes to hit targets. This is a perfect example of why at the end of the day, we should zoom out on the charts and we should implement patience on a daily basis, because these things take a while to play out. And you can just see on this chart, we hit the 80-cent target that we talked about all the way back in January. That blue line right there was the 80-cent target. And now, you know, as we got in the bounce over the last month or two, right, from hitting that target, there's been structure forming, and it's just another waiting game, waiting for markets, waiting for traditional markets. There's a war going on. We're waiting for that. But there's structure forming. And oftentimes when we're taking the technical analysis and we're pairing it up with real world events, there is a very nice harmony between the two. And so that's why the charts do offer us a roadmap. So that's first things first. These things take a while to play out. This is why we every day we plan, we anticipate. And so we can be prepared for whatever scenario happens. Now, what I want to talk about is the whole purpose of this video. And what brought this up was a tweet I just saw, a comment on one of my tweets. Dan, what's your opportunity zone for accumulation? I've been eyeing the 78-cent mark as ultra level support. So I think in this video, let's check it out real quick. This is my plan. And that is a target out of this larger symmetrical triangle type of pattern that we've been tracking. So again, we've talked about this 50 to $1 range area, for me being this area where I'm kind of like, it's probably time to do a little heavier accumulation for me. So that was in January. That was where my head was at. That's what I was thinking. And now here we are, right? And I want to revisit this. I want to talk about this. I've mentioned recently, I've been accumulating ADA. I haven't gone so heavy, right? There's a very big part of me that wants to. But there is the piece of me, because we still have this 50-cent target, the 200 moving average right down here, confluent with that 50-cent target. There's that piece of me that's just like, you know, save that heavy accumulation for that type of environment. And now when we start looking at, well, is it possible that Cardano even makes it there? I want to give you context outside of just Cardano for that, right? And I want to look at a Bitcoin chart. So here's Bitcoin on the zoomed out weekly chart. Now, every time Bitcoin has really seen some type of long-term consolidation to the downside, and I'm talking about every time since back here, and this was a 2013 swing high going into that bear market, Bitcoin has consolidated below this longer-term Fibonacci. And these Fibonaccis are something I really started tracking back in the last bear market. So for instance, the swing low of January 2015 to the swing high, bull market high 2017, this area on the charts. And I was identifying this area on the charts back in 2018, and a data point that really hit home for me after we really exited this market cycle was this. Bitcoin fell below the 786, right? But it did the same thing back here, falling below the 786 in 2015. So that's kind of this consistent trend with Bitcoin. Now, I'm not sitting here saying Bitcoin's falling all the way to the Fibonacci, once again, and then below the 786 line, which is here, below 17,000. I'm not saying that's what is going to happen. But what I am saying is if we're in this environment where there is going to be continued downside and there is going to be a capitulation type of scenario playing out for Bitcoin, in my view, at the very least, Bitcoin will very much be falling to the 618 at 28,000 and below into this entire Fibonacci range. And for context, the Fibonacci range is the last bear market low to bull market, so far the all-time high, right? This is the range that Bitcoin will be falling into. The reason I'm talking about this in a Cardano video is because from a price range perspective, we're looking at to the 618, 27%, to the 786, 54% for Bitcoin. So let's just call that, let's call it 40 to 50%. Bitcoin's falling deep into this Fibonacci range. Cardano likely will be experiencing the exact same losses. It's likely, it's not guaranteed, but Cardano, it's just like every other altcoin. Most altcoins operate and trade in a more volatile way than Bitcoin. So if Bitcoin's going up, usually altcoins are going up a little stronger. If Bitcoin's going down, usually altcoins are falling stronger. So let's take where Cardano is right now, 40 to 50% to the downside. 40% just gets us to our 50-cent target, right? 50% gets us to around 40 cents. And if there's even more capitulation, Cardano could be falling below 40 cents, right? So my definitive accumulation area for ADA, it definitely is the 50 cent to $1 range. It's, I think, on the long term, a great buy, but we can't ignore where we are right now, especially, Cardano against Bitcoin since even January hasn't been like extremely strong, right? It really hasn't been. We can go look at an ADA BTC chart since January. So January, right around here, it's down, right? So it's not like Cardano has been strong. So it's already been operating on a weaker level against Bitcoin. So going back to the ADA chart, we really have to keep that into context, meaning if Bitcoin's going to fall, Cardano might continue to operate in a weak manner against Bitcoin, right? And maybe it doesn't, but let's assume it does to be safe. So for me, it's preparation. The 50 to $1 range, a great accumulation area in my view. That's why I've started. But beyond that, are you ready for potential capitulation below that area in a similar sense where Bitcoin in times past has fallen below these Fibonacci areas, these higher low support areas for that final capitulation low? And what I mean here is a 786 to fall below that area, right? It makes sense that Bitcoin would bottom out exactly at the 786, but 2 times it fell below, 1, 2. And are we going to see a similar thing for Cardano in this? And by the way, if we use a similar Fibonacci on Cardano, it doesn't work quite as well. Number one, again, because Cardano is extremely volatile as an altcoin. But number two, if we go back, we see we don't even have data beyond one macro cycle for Cardano. So we can take the last bear market low back here to this swing high, all-time high, and we can say, wow, Cardano's already in the Fibonacci, right? So we can't really use it that much. Even if we had an extra cycle to utilize as data, if we look at Ethereum, if we go to an Ethereum chart, let's look at Ethereum's macro trading within that Fibonacci. So here's a swing low from 2016 to swing high, all-time high 2018. Look at this, Ethereum. It did fall into the Fibonacci, but it acted as no support. There was no support at all, that Fibonacci for Ethereum, and it just fell. So that's why Bitcoin's Fibonacci is probably the best guide that we can use in terms of these market cycles. And then we take that chart, we take that data, and we kind of use it in synergy with the Cardano charts. And this is what we're looking at, right? So yes, Cardano's in that Fibonacci. However, the 40 to 50% to the downside potential for Bitcoin is what we should use for Cardano charts. And it really does take us down to a potential 50-cent target. So at the end of the day, that is my approach to ADA accumulation. And just by the way, I don't have on my calendar, buys set. It's not that organized for me. I'm very much on a daily basis trying to watch these charts. I'm trying to watch S&P 500, traditional markets. I'm trying to see what's going on with the war. There's so much happening. It becomes extremely difficult just to make these consistent, educated guesses, right, of exactly when to buy. It's impossible to do the exact perfect thing. When we're looking back in 2 years and we're looking and we're seeing what we did, it's like, oh, we could have done that differently based on what happened, right? So while we're in the moment, all we can do is truly anticipate, but it's a balancing act. And it's really, truly your own decision on how you go about these markets right now. From historical context and data that we have, this is how I'm going about it. 50 cents to $1. It's like not only getting those buy fingers ready for me, but I've been buying, right? And that goes for right now accumulating Cardano altcoins. And I'm going to do a separate video on that, because right now, as Cardano and crypto markets really are experiencing kind of this important cycle reset, I think now, outside of just ADA, Cardano altcoins, the opportunity that is there right now is incredible. And this is what we've waited so long for. And we're here right now. And the fear is high. Yeah, I get it. But I'm just telling you, everybody, I think the opportunity is extremely, extremely strong right now. Although the uncertainty is strong as well. But that's why we prepare for these things. But the data is clear to me on the charts. There's much room for downside. And I want to have some fiat ready for that, right? And we've been talking about these targets for months. We continue to prepare for them in case they happen. We don't know if they're going to. Maybe they don't. Maybe markets turn around, everybody. Maybe like this is the bottom right here on this monthly chart and going into the Vassal hard fork. And by the way, this needs to move over. Going into the Vassal hard fork, maybe Cardano bounces. We're at $1.50 by the end of June or the end of May or something, right? Prepare for that scenario as well. But I wanted to do a video on this just because someone asked, and I think it was just important to just retouch up on everything we've been tracking and kind of try and bring it all together. So let me know your thoughts. I guess let me know your approach to these markets. I'm curious. We're all different. This is not at all financial advice. This is just data that I'm sharing with you, trying to talk through it with you, because every day, I'm also trying to figure out what I'm going to do and how I'm going to approach these markets, because it certainly is a volatile, crazy thing. Nobody knows what's going to happen next. So I appreciate you watching. I'll see you in the next video. God bless.